Oh, thank you. Uh, you, you mean 10:25 today?
Hi, everyone.
Yeah, no, I couldn't get there by 10:25.
um,
It's already almost 8 o'clock, so yeah, that's okay. I appreciate you trying.
let's get our charts up. How about that? Let's do that. See that we've got them sitting around here somewhere.
Okay.
Want to make sure that you can hear me and that you can see the screens. Let's see if we can put this on uh, full screen. I've been looking at the feeds, and it does look like we're going to be opening a little bit flat, maybe a little bit to the upside. Nothing super dramatic, yes. I apologize about that background human. His voice does resonate. Okay, let's go ahead and get started. Let's take a look at what we're looking at. Start with the ES. Let's go to, first off, the big picture event, what we might have happening from a 4 hour perspective. This is the Fed anchored VWAP, and so we are battling with it. We were battling with it at the close of the day. We've got a fair bit of congestion on the 1 hour chart that's pretty close, but the numbers to really pay attention to right now is the fact that we have the call wall that drifted up to 70.50. It was 69.50 most of last week. And the put wall is also moved up into 6,800. So we're still in a very significant buy the dip space. However, anything can happen. We've got tons of disruptions, and those disruptions can really end up making a difference. So, what do we want to see when the chart opens up? Let's take a look at the 5 minute formations, and here's what we're looking at. We've got all of Friday's motion sitting in a pretty fair pocket. The rotation from peak at 69.40 to trough at 68, 66.75. That looks pretty much like the range that we're going to be after. Well, let's draw a quick Fibonacci and see, why does this always retool itself? Okay, so first of all, we're going to make that. We're going to do this, and I just want to see the 50% regions for now. Right, so 50% puts us right where we're battling. Above that area, we should get up through 69.14 and then back to 69.39. If per happenstance this noise that we have in the market tells us, wait a second, we could potentially have a breakdown, you can see on the 5 minute what we're staring after, right? So this is the pocket that we are looking at, and here are the VWAPs. My thought is that it looks pretty sideways, right? So if you're staring down the charts, I would say let's give it uh, let's give it a go. If it comes into 68.90, and it's probably got a 6 point stop easily. All right, let's take a look at the NQ. Yep, I'm off there. We are headed to the NQ. Let's take a look first at the big
Thank
picture.
What seats do you have us in?
Big picture. 4 hours. We can see that the Qs look a little bit different, but they're still buying the dip. Here's a trend line of importance, I think. This trend line here, you can see that we bounced right off of it. And so that is going to be a pretty important line to watch overall. It does look like dip buying is very likely to be in force. Let's go down and take a look at that 5 minute. And we will see what we've got going on. So we've got a top end somewhere around 28,800. On the upside, 805, and the low end, 25,280. So it's a pretty big rotation. Let's see where the 50% range of that is going to be. It's sitting at the 23 right now. You'll notice that the ES has recovered 50% of that wave action on Friday's formation, but the NQ only recovered about 23%. So it is a little bit weaker. It really is a little bit weaker. We have an anchored VWAP from the top, but I will move it to the bottom. And so what we're looking for is a potential buy zone around 25,270. That's my suspicion if I were looking to get involved here, right? So dips still buys, feels kind of, squirrely, but definitely. Call wall, big call wall, 26,000. Put wall, low, 24,500. The 13 Fs of a number of very big traders came out. I don't know when that got released. Maybe it was late November into December. I can't remember when they got released, but a lot of them show that they're rotating out of mega cap tech. And so that could be the reason that the NQ is not operating as well as the okay, wait a second. Right-clicking the mouse and clicking buy at market simply places a transaction at market price. Yes, that is correct. It can't do it now because the markets are closed. But when it does, we will. So we're going through the motions. Here's how I do it. I go ES, NQ, then I go micro Bitcoin, then I go oil, and then I go gold. Always in the same sequence, always. So if you get here and I'm talking about gold, just scrub backwards. You can see what I've said about the NQ or vice versa. So these walls are showing us that here's the big thing. If we lose 25,280, chances are, if we don't immediately recover, we could really see a fail down into the put wall. The one thing that bothers me is the following. When you have a great big spike in volume like this that we see in the NQ, and it's bullish, a bullish candle, but the continuation is not bullish, that tells me that this is a last-ditch attempt to try to go long, and so it'll probably get squishy before it recovers. Notice this one is a big move short to the in the price action there. It moves up a little and then all of that big volume comes down. I like looking at these spikes because they tell me if I lose the edges, I know I've got further downside on the horizon. So let's go to micro Bitcoin. Let's see what we're seeing. Let's start again. Let's go to 4 hours. Pretty big reversal that we saw on Friday. Yeah, pretty big reversal. Big volume candlestick. This could be Bitcoiners thinking about a geopolitical risk of some kind. I do not know. They obviously are trying to lift it, but look at the formation itself. It is very sideways. Yes, they are buying the bottoms. So if you are a Bitcoiner, a hodler, whichever, just remember that this line here that's rotating up, that's the trend line, gives us a floor at, what's that, 87? And that would be what you would stare down for a nice clean buy if you want to step into a super tight time frame. We can go to the 5-minute, and you can see that it's up over its call wall already. The put wall is down at 82,000, call wall at 90,000. This, this wave, let's see if you can measure this wave. Yeah, okay, so the sticky wave, we would have low to high. So where are we? We're above the 50% range. So roads are pointing to the north right now into the 91,000 area, which is where the call wall sat all of last week. And then potentially 91,500. But we'll have to see. Again, the markets don't look like they're going to gap very much the way that I'm looking at it. So here's what's going on with oil. All right, I don't look at the micros. I look at the big index, and that gives me a better understanding of what's happening. Yeah, other than, could you make your stops wide? Yes, or you could choose not to trade. The element of trading for longevity starts with the following question. Does it benefit me to insert myself into a potentially volatile market when I have significant constraints on my trading capital? I would say maybe no, but that's just me. I would say wait it out, let it shake out, let price action come to you, and then take a look. This 4-hour formation, if we take it to the last major wave, you can see we're under the 50. If we go to the 5-minute chart, put wall is at 55, call wall is at 61. So the traders are thinking we stay inside of that range. The trading formation from Friday, from high to low, gives us it's sitting right at that halfway mark. So could it gap up? Yes. Could it gap down? Yes. Listen, I just want to give you a little bit of a backdrop about this Venezuela thing. This is a very strategic move. It's got literally, I can't quite say that. It's got a lot of tentacles. What you have to realize is that Venezuela is a market that is, most of the oil is in the ground and untapped. They have very poor structural resources to get the oil out. So there's going to be a ramp up time. We have no idea what's going to flesh out. There are a lot of known unknowns. And so for folks thinking that oil is going to do something massive at the open, anything can happen. But my thought is, if there's a massive move to the upside, it's going to collapse. If there's a massive move to the downside, it's going to bounce. What about civil war in Venezuela? So it's much easier for us to consider a civil war in Iran right now than a civil war in Venezuela. So no, I don't think it's not, it's exactly that. Listen, they are tremendously resource heavy, but they've been so poorly managed
The market is
since
open.
the 1980s that it's just, it's a dumpster fire down there, right? Okay, so oil just opened. It gapped up into this baseline and now failing. So my thought is this is speculative motion for people. And so if I were taking an educated
Order filled.
guess on this one, I would buy the bounce right here and I would leave my stop at the low. Right? That's essentially what I would think here. Simply because the world is not going to be awash in oil. That's not what's happening here in Venezuela. Okay? So,
Order filled.
all right, so now we're up $400. That's our first trade. But literally, I just went to where is support? Where is frontline resistance? I bought it just off of the support zone. I sold it just off of the resistance zone. And that's it. Okay? Now, let's go to the other markets. Let's let oil shake out just a little bit. We'll see another 5-minute candlestick. It'll tell us a little more about what's going on. Let's go to silver. All right. So silver has a call wall at 80 and a put wall at 60. The only reason silver would be moving right now is geopolitical risk, right? And that is something where we go, holy cow, are we going to go to war with anybody? I doubt it. Somebody might go, well, isn't this war? Us capturing Maduro? Listen, the guy, he's been wanted for drug crimes since 2020. Okay, so they arrested him under the code of law that says, hey, listen, if you are a drug cartel owner or whatever character you are with that, we're gonna arrest you if we can catch you. And so they did. They went in and arrested him. So that's why he's being held. Their vice president is in charge. And, our commander-in-chief sometimes comes out and he's a very expressive fella. And sometimes he comes out and says, hey, we're going to be running Venezuela. That's not the goal. It's not the goal. The goal is to stabilize the event, and the goal is to cut off all the resources that Venezuela has going to China and Russia. Okay, so this is a very intricate game, a lot of Gordian knots, but we don't really care about that. Politics and whatever's happening in global macro, nothing but coffee talk when we are working with the markets. And so the question is, what's going to happen in silver? And so my suspicion is, because the CME has lifted margins continuously, they are very keen on stopping oil doing this silver doing this madness. Do you see this huge spike up and then this move down? It comes narrower. CME comes in right around here, intraday, changes margins, then it spikes again, but the rotation is tighter. And now it spikes again, and the rotation is tighter. What they're trying to do is stabilize the price. Okay, so let's leave all that by the wayside. Let's jump into formations. How do you want to trade oil today? Silver. Good grief. So what do we have here? This is a doji, second 5-minute candle, very big. If you're thinking to yourself, what might happen? My first thought would be, okay, gap fill. Gap fill. Now, my thought at this juncture is that in the near term, every big spike in silver into the last higher, in the last lower highs, they're going to get sold off. So what we can see is a wick that goes all the way up to here. I'm going to draw a line right there. So oil is not only oil, folks. Oil comes in light sweet, heavy sour, heavy. It comes in all different kinds of flavors. And you need to mix a lot of them together. And a lot of countries, like ours particularly, we only have one kind, light sweet. That's all we have. And so we need heavy, and there are other countries out there that also need other kinds of, other grades of fuel. And so it's just a very big hodgepodge of things, folks. It's not cut and dried, and it's great clickbait. You can wind it up. Everybody can talk about what they want, but again, clickbait. Now, here's what we had. That's old support. New resistance broke out over the top. So the edge that we want to watch for today, as holding as the high, is $73.54. If, per happenstance, it gets above 73 again, you could potentially take another long. Quite likely. But my suspicion is that it's going to fill the gap and potentially move into the bottom of the range. Okay, so if I do that, I put a Fibonacci here. That's the 50% spot. Definitely could hold it. Possibly. My thought is it fills the gap. And so that's what we'd be staring down. If you want to take a look at micro silver and do the same thing, you certainly can. This is the box this is sitting in. I would suspect, let's see if we can get something like this here. Oh, I really just want to short it, flat out. I really do want to short it. So let me see if, let's see what we can do. All right, that's what I've got. I've got it at just above the opening tick. My stop will be, my stop will be wider, to be honest. I don't love this trade, but if it goes off, I'll go right to the chart. Why do you like the short high? Because my premise is that the CME has come out and said, hey folks, I know what you're doing. I hear what you're doing. I'm going to circumvent that. Remember, it's always about keeping whoever is in charge. Okay? I know that sounds horrible, but welcome to life in the markets. Big money is going to have control over market structure. They've come in and they've said, listen, we're going to raise margins and we're going to continue to raise margins if this contract continues to be very volatile. So my thought is, what they're doing is giving us some sort of giant mean reversion trade, and so that is why I'm trying to short the high. That's exactly right. Venezuela has heavy and light sweet crude. That is absolutely correct. Okay, so here's the thing. A lot of speculators are buying the calls way out in the money in silver, so way out of the money. So they're looking at the 80-85 spreads. But as prices move up, open interest is coming down. And so that means, remember, when Hoke starts talking about it, if you look at the volume for the day, let's say the open interest is 5,000 and the volume for the day is 4,000, and you come in the next morning and open interest is 1,000, it means that all of the volume was covering and moving out of the market. Right? That's what we're seeing in silver right now. And only speculators have bought these calls way out of the money. And only when price expands up over those edges are we going to have a runaway train. So my thought is, as long as we stay below 75, we're going to have bounces or equal to sell zones. This is my thought. Is it possible to find a truly reliable floor? You know, that's a really good question. And let's see if I can read your name. Chauvin? Okay, so here's the thing. And I say this all the time, especially when we're on group coaching. There's nothing reliable about the market. I know. Listen. Get that in the solar plexus, folks. There's nothing reliable in the market. All we work with are probabilities. Okay? So probability versus reliability, related, but not the same things. Okay? And so here's what we have to realize. When we are staring down places and we go, okay, that's a reliable floor, you could come in and go, that's a reliable floor, and I could come in right below you and sell something for 5 ticks lower just because I want to, and it will break the floor. So what your mind should say is, if I choose this trade, what's my risk? What's my risk? That's how you need to approach the market, not can I find a reliable floor. I understand that that might be something that you want to do. We all want to find a reliable floor, but all we can do is look at probabilities and say, okay, if price action came up here and 4 times, 1, 2, 3, 4, 5, 6, 7 5-minute candles hit 44.11 and rejected, I can say, probabilistically speaking, if I get to this area at 44.12, I should see some sellers. Probabilistically speaking, that's all I've got. Okay? So when you look at the market, the number one thing to say is, what's my risk if I take this trade? Not, have I found the floor? You know what I mean? Something tells me another shoe's going to drop. Well, you know, shoes drop all the time. It is what it is. Let's see what platinum is doing. Platinum and palladium had huge days. Holy smokes, look at these guys. These call walls are still in play, but that's pretty bullish. Let's take a look at the 30-minute chart and see what we see. First order of resistance is old resistance, new support, new resistance. And so you could say, hey, that's my target, right? You could say, all right, I'm going to look at my 5-minute and I'm going to wait for any kind of pullback and I'm going to trade it into 22.35. This is another one that margins should get affected pretty quickly in general, or maybe they already have based on what the price action looks like. Yeah, that's a pretty good looking resistance area, to be honest. You could certainly trade it up into that zone. Here's the thing about what's happening. Gold and all of the precious metals do have a tendency to rise under geopolitical uncertainty. Now the question is, do we actually have geopolitical uncertainty? I mean, the whole world's gone bananas, folks. All we got to do is look outside the window. So, you know, there's uncertainty everywhere. The markets tell us that it's not that big of a deal. So what we want to watch for is spiking volatility. Now, I do not think that we have this instrument. Yes. The tradable VIX is not here, but looking for what volatility does, how it spikes, what it's saying, that's going to give you an idea of what these traders are thinking about. Now notice how the ES filled the gap, right? Let's take a peek at this. Here's our opening, right? It gapped up, came right down to the close of the last tick. That's at 5 o'clock Eastern time. And it bounced right off of that. So that's our line in the sand. If you're thinking to yourself, I like this long, then you're welcome to take a long right there into whatever you think. If you think, hey, this is a short and it's going to go back into my lower edges, also you can do that. For me, this is a space where I can look at the entire thing and say, wait a second, I had buyers all the way up to here, and I have buyers and sellers all the way around here. So what I know is that at this point down here at 68.90, I've got some buyers from the last time they were there. So that would be where I would want to position a trade, right? 68.90 and a quarter. That's where I would position that trade. I don't like trading in the middle at all. I'll trade the breakout. If trend is in my favor, I'll trade the breakdown if trend is in my favor. But I don't like trading in the middle. So someone said, hey, what's going on with the NQ? Where's the trade there? So the NQ hasn't quite filled the gap. They seem to be building inventory right here in the pocket between 25,407 and 25,455. So it looks like it's pretty sideways right here. Oh, hey, Jay and Bruno, nice to see you. I'm going to need proof of that drop trades or drop in trades, drops trades. Yeah, I gotta know. Gold's a little sideways. All right, you guys are just popping in. Let's go back to silver. Right? I think the bounces in silver are sells. I have a sell. Oh my goodness, it missed me by, what was that? Oh, 4 ticks. So yeah, I have a sell here. I don't love that I'm making higher lows for this sell. It could easily be a break, right? But yeah, that's what I'm thinking. That's my silver space. No, my sell order, see, it missed it by actually 3 ticks, yeah? 2 ticks, because I had it set to go at 14. What's a call and a put in your chart? Could you speak about that more? Okay, so when I put these call and put lines up, and we don't have them in SIL, we do have them in SI, what they are telling me is that traders are trying to build a frame with a high that's no greater than 80 and a low that's no less than 60. Now you might go, well, how does that help me? It doesn't really help us at all until we're right on the number. And so what that means is when we get close to those numbers, they start telling us that the traders are going to have to make some decisions. Right? And so those decisions, I am so miffed that I missed that short. But if it breaks down one more time and then pops up, I'll be okay. I'm not going to move the entry because I still have these higher lows. I don't like that. I still have the higher lows. Okay. So that's what we are staring down right there. Anytime you see a call wall or a put wall, like I have written there, it says, hey, people in the markets using options have placed a significant bet that says price action won't move below that number, that's a put wall, or above that number, that would be a call wall. Now, I know a lot of people do sports betting. You can bet for things all the time. They just don't. Hey, I bet XYZ wins, and they don't. These are just calculated probabilities that the traders are taking. All right? So that's just something that we need to watch in general. Specifically, when it comes into that number, it tells us, look out, folks are going to make some decisions here. Let's see if the markets are really moving. No, we are still inside of our first 15-minute candlestick. Right. So how do we want to stare that down? If we're looking at something and we're saying, hey, this is a formation I want to trade, well, define your edge. Where is it sitting? We are traders. If we're intraday traders, we want to buy and then sell higher, or we want to sell to open and buy lower. In order to do that, we have to build a premise that says, wait, how can I make a calculated bet? This is not a guessing game. It's a game of probabilities. Now you might go, well, how different is that? It would be nothing if I had a coin toss. It's 50-50, right? And so let's say that the guess means nothing and it's a coin toss. Hey, I go long, it goes up. I go short, it goes down, I win. Now the question is, what if it doesn't do what you want it to? How much risk are you willing to put into play? And essentially, that's going to be the thing you have to answer. If you go, hey, I think it's a long, Well, what does the market tell you that the legitimate risk to play is? For me, if I'm trading a 5 minute, I will look, let's say I want to go long up over here, right? I would look 2 candles to the left at the low and I would say, okay, that's my stop. So 2 candles to the left is 58.93 and this is 69.03. That's 10 points of risk. The next thing is, well, what's my reward event? Well, we never know really what the market's going to give us, so we can only estimate our likely reward. And so we might go, hey, that's 69.11 to 69.14. Okay, so that's 10 points. That's a 1-to-1. The question is, how many times can you take a trade with a $400 drawdown? Right? If you go, hey, well, I'll just make my stop, 200. How many of us have been chopped to bits because our stop is too tight? Because we're not using a stop that the market has told us is required. You know what I mean? It's pretty important for us to notice what to do. So let's say somebody took this trade and they're moving it up. Once this 5-minute candle closes, then you can move your stop up 2 candles to the left. That's how I walk a stop up, right? Especially if I'm trading a 5-minute. If I'm trading a 1-minute, I don't do the 2-candle business. If you're trading a 5-minute, you can use that 2-candle. Most of the time, it's going to give you something that's rewarding. Well, I think it's good to pray, but I'm not really sure that the Lord's ultimately engaged in sitting behind your slot machine answering prayers like that. I'm just saying. He might be looking for something else from you. Okay, so big gap up in Bitcoin. Remember what my commentary was that this bounce is potentially geopolitical, right? Which I think is a fallacy for Bitcoiners anyway, but I'm not trying to sound like a boomer, folks. Don't curse at me. I'm just telling you I've been to a couple of rodeos. Yeah. And so the key thing is we are up at this 92. We talked about this when we first looked at the charts. And here is that trend line event that takes us into 92,600. That might be the place you want to head to. Not a bad spot, certainly. If you took the long, this is the heavy congestion that the traders will find themselves battling against. And that might be right up at 93. My suspicion is that it could easily come back into heavy congestion and rotate before it moves to the north, right? That's a really big gap, and I suspect it fades. We're all traders. And I thank you for, if I can be your favorite boomer, then I'm okay with that, right? I truly am okay. All right. Let's see what we've got. Do we even know the supply of silver realistically? Actually, we don't know the supply of gold or silver. specifically. We don't know. But that's not what is making the trade go, right? This is speculative. Yes, get off my lawn. All of this is speculative motion. Bitcoin, entirely speculative. Silver, entirely speculative at this price point, right? Though, listen, a couple of miners just reported that they downgraded their future outlook because of constraints about getting silver out of the ground. So although silver can come out of the ground somewhere at around $23 an ounce, what we are having trouble with is getting it out of the ground for one reason or another. And so what we have now is speculation in these financialized markets. See, a silver's futures market is a financialized market. Gold futures market is a financialized market. Platinum, everything that we touch really is just moving around dollars and cents. It's not actually moving around physical gold or silver, right? You're daring the ES to test the low. You know, that 50% range is a good place. I'm looking for the bottom of the box. Could it leave me in the dust? Absolutely, right? It could easily leave me in the dust. I've got, where's this VWAP? This VWAP is anchored off the low, so it tells me most of the traders that bought this 2 p.m. Eastern time move to the north, they're still in the green, right? So it's definitely bullish from a dip buying perspective. It's just not the right setup for me. If I were staring it down and not doing all kinds of things, I might try to take it at 68.97. I might do that. That might not be a bad idea. But we'll see what the wicks do. I have a strong short bias for tomorrow in equities. We have BOJ rate pressure and geopolitical risk, historic January decline. Well, I would say that you've got some very good points there. That's potentially valid. I would say that what I am looking for to have a strong short bias, I'll be looking for shorts on gold. So we have a little bit of divergence, but this is the 5-minute candlestick. We're still inside of that 5-minute candlestick. If we can break the low of the 5-minute candlestick at 43.85 and then fail a retest of it, that makes for a good short, I would say. That's the one I like. I like the short at the top. Here it is coming in. Let's take a look at a 2 or 3 minute. Now, you know what? Let's drill down and look at a 1-minute formation and see. Look at the volume, right? So we have a big volume event. It was bearish. Candlestick formation holding here. You could take a long here, but again, if you're looking at a 1-minute chart, what do you want to see to take a long? Well, These are high, low, lower, high, lower, low, lower, high, lower, low, lower, high, lower, low, lower, high, lower, low. That's catching a falling knife, right? So if I wanted to buy it, I'd need to wait to see something else. You know what I mean? If some of us are a little bit crazy and we trade something like a 30-second chart or whatever that is, you can still look for the same rotation. You can still say, hey, if I see it doing that, then, you could wait and watch it try and get above this thing. I just don't think anything's telling me to go long right here. Not yet. Right? And if you do buy that, your thought would have to be, okay, my stop legitimately should be the low at 54. And here I am at 66. So that's a boatload of risk. Right? That's a boatload of risk. I don't like the look of the tight 0DT band. Yes. So that's a good observation, Tom. And here's the thought. The reason I stopped putting up the 0DTEs, one, they move so dramatically. And then two, when we do see them tight like that, we know that the traders are essentially offsides, right? And so when we're seeing the trader offsides, we know that pretty big moves are very likely to get themselves right side up. We can't go for the gold gap on the shorts. You sure could. You could do it. The question is, listen, I truly mean this. You can take any trade you want. You can take any trade you want. The question is, what's your risk? What's your risk? A lot of us don't look at the market like a professional money manager. And that's the only reason they still have jobs. So do it that way. If you're saying to yourself, listen, I want to go short into the gap, the first thing that's going to give you that opportunity, if you're saying, hey, that's what I want to do, you can go to your 1 minute chart and you can say, okay, where is old resistance? Old support that would be new resistance. So you could legitimately look here and say, listen, I want to take the short at the breakdown of old support. Here is resistance. Here's a breakout level, that's support. This is support, 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 support. Crash right through. That's where I put my sell order in. Right? Now, the person who wants to buy at the bottom here could also buy it because it's trying to hold a floor here, but the stop is really big. For me, if I'm going short, my stop isn't that big, right? It's not that small either, but it's not big. And so I'll say, hey, if it comes here to me, I will take the short. So you can absolutely. It is quiet today. I'm so sorry. I have it on my regular, yeah, I'm so sorry. I'll lift my mic a little bit closer. I apologize. I love it that you call me Auntie. That's so funny. All right, thanks everybody. I appreciate that feedback. So that's what I would say in terms of risk to reward. Your thought should be, hey, I want to trade X. Great. How much will I lose if I'm wrong? That's how you frame out a trade. Because remember, if you worked for me or any other professional money manager or any money manager or for a home office, whatever it is that you're doing, if you worked for me and you said, hey, I'm going to trade this today, my next question is going to be, okay, what kind of risk thresholds do you have? And tell me about your premise for why you're taking this trade. See, one of the things we don't realize is that when we are individually driving our own revenue streams, we don't have anybody going, hey, why are you doing that? See, we don't have accountability to anyone. And that's really bad for most of us. Do you know what I'm saying? Because if you can do something without impunity, meaning I don't come after you and wrap your fingers with a ruler or something like that, you're going to do whatever you feel like doing. But if you have to have a reason in order to execute a trade, you're going to have a reason. And if you don't have a reason, it's going to be something that makes me go, if I'm your boss, why are you taking that trade? Do you know what I mean? If your silver trade gets picked up, where would you put your stop? That's a great question. Let's go here. My stop, which would be a little bit wide, would be the top of this wick. From a 1 minute perspective, let me look at a 30-second. I don't even think that's really smart for me to do, but let's see. You know, to be honest, if it goes there, I would say, let me draw Fibonacci. Because the first 30 minutes, the first 30 seconds is really, oh yeah, that's perfect. That is absolutely perfect. So I've now moved the entry point to 73.10. I'm going to make my stop 73.25, right? That's what I'm going to do. That's where that stop would be. All right. So, oh, look at this. This is like the second time. Right there. And now my rotation has shifted, right? Because if I am looking, here's the thing. My setup is old resistance, new support. So here's my downward trend. This is the trade that should have executed. I was being a little cheap, wanted to get it 1 point higher, and it came in about, 9 ticks. 9 ticks lower, maybe 8 ticks, something like that. But you can see old resistance became support and then became resistance again. That's your entry point. When it rotates again, the price action is now giving me low, higher low, higher low. And so my thought is, I don't love this trade anymore. Because it should have come right into this zone. So now the next space for me would be at the top of all of this inventory accumulation. I expect it, because it reached here, pulled back. This is a look below and potentially fail. because this is the line in the sand I want to see get broken, right? Here's a look below, and if it comes up into here, that's a look below and fail, and that means it's going to go to the top of the box. So, you know, I don't like the stop there, the short there anymore, so I'm going to move it out. Can we have market kickoff with Anne-Marie and fast markets with Anne-Marie and other? Cody. Cody. That's very sweet. How many times have we returned to the VWAP? Which instrument? This is not the VWAP. This is just a moving average that I have popped on today. Let's see where the VWAP is for the opening formation. Whoopsie. Has anybody ever used that ghost feed indicator? I have no idea what that means. Oh, so the VWAP from the low of the open this morning, we're now sitting above it. So see how this is a look below and fail? Why I pulled my order here. Now, could it be that it would still fail? Yes. But probabilistically speaking, if I come up to the edge, pull back, and then move back up over the edge, that is a look below and fail. And so it should come back to the top of the inventory accumulation event. At which point, I mean, I could say, hey, I'm going to try and short the 77s now, and I'll wait for it there. But that is this setup, this is perfect. This, when you look for a trade, this is a great learning spot. When you look for a trade and you have the setup, hey, listen, I am trading old support becoming resistance. Let's say it misses you and you're waiting for it and it comes back, gives you a higher low, and then you end up being above the VWAP and above the moving average. Look to the left for heavy congestion because it's going to move to the top of that inventory. That's why I pulled my order. Does that make sense? Oh, nice. Very good. Very good, Galley Power. Very good. The lack of sleep. Thanks, Cody. All the love. Look at all this love I'm getting. I'm so happy. All right. What do we want to look for next? Let's see how the ES and NQ are doing. Oh, shucks. It bounced off of this one. Let's see where the VWAP is. Let's see if it'll go down. Okay, so we're under the VWAP, under that moving average. We just filled the gap. Do you see how the traders are trying to bounce? Let's see if this is a look above and fail. So the look above is going to be after the breakdown, it pops up into this region of congestion and then rotates right over and closes. See, my buy zone is not until all the way there. We can see the trend line.
Order filled.
Oops, what did we do? Oh, silver and gold filled at the same time. Holy moly, let's see what we got. All right, let's leave that there. Give it a 2. Whoa, that's pretty bouncy for both of them. Yikes. Okay. That's going to stop me out right there. That
Order
gold
filled.
is- Yep. All right, let's see what happens with silver. Whoa, I'm going to flatten this.
Order filled.
Yeah. Let's see if it holds to the top of the box. That is very aggressive motion. The breakaway 50 sends me to the top of the box. Oh, crud sickles. Crud sickles. Stop. Yeah, that is a breakaway. Let's see what oil is doing. It's the bounce. Where is the gap fill? Up here. Well, gonna have to sit up and work on this a bit. All right, let's see. That's the thing about these metals, right? They move so fast. The moving average I have, I don't know, I change my mind on these things all the time. Let's see what this is. 14. 14, and I just have one of them. Just one of them. Yeah, this is a very big break. You don't want to step in front of it. Tons of volume. Tons of volume moving in. Definitively speaking, that is. The top of the range. Oh, good for you, E. Congratulations. Inverted head and shoulders on, yeah, I say, years. YSE trades. Is that it? Yeah, years. Yeah. Congratulations, folks, on that breakout. Fantastic. Fantastic. Where would you get long? No, it never apologize for doing well. Never say sorry. Of course it feels good. That's an awesome way to start the year. That's fantastic. At what point do you move your stop? I tend to move mine too early. Okay, so here's the thing. If you're trading a 5-minute, I spoke about this just a couple of minutes ago. If you're trading a 5-minute, directionally, right, this 5-minute is very bullish. We have these higher lows. If I had been watching this, remember what I said about the look below and fail. This is a classic look below and fail. Here it is. Here's the range accumulating all the way through here on the 5-minute chart. These are the major wicks. It looks below and fails, telling us the very next place it's likely to go is the top of the congestion zone. And because there's so much speculation here, it continues to move up. So this is a great example of a breakout formation. It comes right into the moving average, comes right into the low of the candlestick, and then completely rotates up. That is absolutely a fantastic move. Just really, really great. If I had been paying attention better and not focusing on 5 or 6 charts, I would have seen this look below and fail and potentially pulled the trade off. But now we're breaking away. Somebody says, well, where do I go long? Here's the thing about something like silver at this juncture. we've got so much intense speculation that pullbacks could be very deep or they could be very shallow. The question is, if you want to trade this, what is your risk taking the position on? So let's say you're trading the 5-minute and you look at the last low, that's 4 candles away, but let's say you just go to 2 candles away, $72.70. Well, you're printing $73.50. If you go to something like a 2 or a 3-minute or a 1-minute, what you want to look for is, and this one's hard, I think, what you want to look for is the pockets that it loses. So you could say to yourself, listen, if I want to take a long, I could go long at the low that's getting built here at 73.40, and you make your stop. It's still very far away because the move was so gigantic. You would look 3 candles over from that low. You would look 3 candles over. So you could do that. If you said, hey, I want to take the long right here at 73.60, your stop would be 73.40, so you're still looking at 20 cents of risk, which, you know, may or may not be something big for you, but it is what it is. And that might be, you know, we says don't short until you see a bearish engulfing. That is, that's a pretty good thought in terms of that. See how it's broken away? You can easily go long here. The question is, how reliable is this formation? Well, it's not reliable at all. It bounces dramatically, it fades dramatically. I would not trade that until it comes back into a really nice space, right? Okay, let's take a peek at the last couple of things, and then we will say adieu, and we will look to what's next. Do we think that this has a potential of breaking out to the north? Yes, it does. Is this a fair space to buy? Yeah, you could. For me, I would want it to come back into a VWAP or into the relative support zone. I mean, it is running. It certainly is running. And you could say, hey, I'm going to take it anyway and watch it move to the north easily. It's just what you're comfortable with, you know, what you're comfortable with overall. The more news that comes out in the overnight, the more interesting price action is going to be. Notice the divergent action. Everything is not moving in the same way. The ES, relatively stagnant. The NQ, relatively stagnant, though it looks like it could potentially break to the north here. Oil, still sitting inside of its first 5-minute candlestick. Micro Bitcoin, inside its first 5-minute candlestick. Only in silver and gold are we see, oh yeah, and that's still just outside its 5-minute candlestick. So I think this is the only one that's higher, right? And it tells me that the price action is literally going to be sideways in the overnight tonight. That's just my gut. Okay? Just my gut. All right, that's it. Any last minute questions? Do any of your kids trade? Yes, they do. We have some traders in our family. They like crypto. Um, uh, I have a daughter that trades options. She trades some options, but by and large, they're not in love with the space the way I'm in love with it. And I think here's the thing. What they see is how hard you really have to work to get good and stay good in the business. So they get to see that grind that, if you're looking at me here and you're like, oh my gosh, she spent the whole month in Tokyo and da 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 da, and, whatever. Yeah, but there's a lot of work that goes into getting into that space. And so I think when you've got kids and they see it, they're like, no, man, I'm carving my own path. So that's it. Well, I don't know about you, Randy. I probably don't work physically harder than a construction worker or a plumber, but I would say the mental aspect of the work is very fatiguing, and I spend a lot of hours studying. So, I don't know. I tell you what, my work is not as important as a doctor's, or frankly, a construction worker, or frankly, a garbage person, right? My work is nowhere as important as that work. But I would say if I took them and put them in front of my screen and I went out to do their job, well, I don't want to go out and, you know, tackle surgery for anyone. That would be a bad day for them. But, if I'm off to dig a ditch or something, they're probably going to have as much fatigue or mental disruption as I would have physical disruption doing that. So I think hard is a relative term. Yeah, there you go. And we can talk about it all day long, but all I do is shuffle money around. It's what I do with my money that makes a difference, but you know, I'm pretty much useless to society, to be honest. You know what I'm saying? It's what I do with my money that makes me develop a sense of service, and of course, how I help others, which is one of the main reasons that I love being here on Topstep TV, because I'm doing more than just for myself, and that's how I feel. Anyways, that's it. I'm gonna try and make those $400 back, and we'll see how the rest of the days go. Listen, just be careful and don't jump into a trade before you assess what relative risk is. You just keep your blinders on in terms of saying, okay, if I do this and I lose this, can I come back and take another trade? Right? Yeah, I'm looking forward to coming home. It'll be this week. All right, thanks everybody. Thank you, Bruno. Thank you, Jay. Um, Good luck, everybody, and I will see you guys. I think I'm on Friday on Topstep TV, so looking forward to that. Take care, everybody. See you.